Thank you, Mr. Chairman. Thank you to our witnesses. Chair Gensler, to you, your open hostility towards digital assets is hurting consumers and setting the U.S. behind the rest of the world. It's also hurting the Biden-Harris administration. You've single-handedly undermined the administration on Web3 issues with your war on digital assets. There's a very strong progressive case for digital assets and blockchain technology, a technology that is bringing down costs for my constituents. This year, crypto policy has received strong bipartisan support, with 71 Democrats joining Republicans in support of FIT 21, our digital asset market structure bill. Unfortunately, you haven't received our message. The 52 million Americans who own crypto watch the SEC under your leadership, Chair Gensler, in shock and disbelief that you continue to treat their investments as illegitimate, undermining their efforts to save for retirement and build innovative blockchain technologies that could drive our economy into the future. Now on to Vice President Harris. Just over the weekend, Vice President Harris made big news, announcing a policy reset from the current administration on digital assets, putting her in line with the bipartisan majority in Congress on this issue. I'd also agree with Whip Emmer that when you read between the lines, this is certainly a rebuke of your leadership at the SEC. I'd like to get a yes or no answer from everybody. Here, starting with Commissioner Crenshaw, yes or no. Do you agree with Vice President Harris, her statement that the U.S. should encourage innovative technologies like digital assets while protecting investors and consumers? Yes or no?
Yes.
Yes. Yes.
Yes.
Yes. Protecting the investors, I agree with that for sure. Promoting innovation, yes, but protecting investors.
Yes or no?
Yes, protect the investors. That's what we are doing.
Chair Gensler, I hope you understand that your misguided approach to regulation by enforcement and open hostility to crypto is hurting our economy and sending American jobs overseas. You've single-handedly set us back years in our support for Web3 technology. I'd like to move on to SAB 121. As you know, the SEC overstepped their authority by issuing SAB 121 while also harming investors in the financial system. Chair Gensler, I have contacted your office repeatedly about SAB 121 and asked to speak with you about this. Your office has totally ignored all of our requests, so I'm very glad you are before Congress today to answer my questions. After watching majorities in both chambers of Congress, including Democrats like Majority Leader Chuck Schumer, vote to overturn SAB 121, do you have any regrets on supporting the SAB?
The Office of the Chief Accountant has been issuing staff accounting bulletins. It's 121 because it's the 121st one in 50 years. Public companies were asking questions about how to account for crypto and is it a liability? And what we found is bankruptcy after bankruptcy, and FTX and Terraform and Celsius and Voyager, bankruptcy court after bankruptcy court has said it's a liability of the company. So I think the accounting that the staff bulletin put out helped public companies understand that.
Thank you. The Government Accountability, a nonpartisan independent agency, was very clear. You lost. The SEC was wrong to skirt around Congress by issuing SAB 121. You're actually making the digital asset ecosystem less safe. Yes or no, Chair Gensler, will you commit to rescinding SAB 121 today?
No, it's good accounting bulletin that's out there, and if somebody comes in and works with the Office of the Chief Accountant in a consultative matter where it is bankruptcy remote, and a number of banks and broker-dealers have done this, where if they're holding the customer funds and it truly is the customers, it's truly the remote from bankruptcy,
reclaiming my time since
it's not a liability.
Chair Gensler, yes or no, do you believe that the one purpose of an SAB is to provide all market participants with the same information to level the playing field? Yes or no?
There's been 120 of them. It helps the public companies. It's just speaking to public companies on how to account for emerging issues.
Instead of recognizing your failure and rescinding the guidance, the OCA has worked with certain banks to remedy the issue behind closed doors. Do you believe this opaque process really levels the playing field for all market participants? Is this process as clear and transparent as possible? I do not believe so. Do you?
It's a consultation process that has existed for years where accountants and the public companies can come in and say, we're going to treat this, in this circumstance, as off-balance sheet. Do you object to anything there? And these banks and broker-dealers have shown how it would be bankruptcy remote, off-balance sheet.
Different rules for different folks, right?
It's actually same rules for different folks.
My time has expired. I yield back.